The shortage of car inventory had a significant impact on the prices of cars in the market. As you mentioned, the demand for microchips increased significantly during the pandemic, causing a global shortage of these essential components. This led to a halt in production lines for car companies, which ultimately led to a shortage of new cars. With fewer new cars available for purchase, the demand for used cars skyrocketed, and prices increased accordingly. This was great news for those selling their used cars, as they received fantastic returns. However, for those in the market for a new set of wheels, the high prices were a real budget buster. But as you also noted, there is some good news on the horizon. Inventory levels are starting to recover, and prices are becoming more reasonable. This means that car buyers may soon be able to find the car they want without breaking the bank. However, the recent rise in interest rates could make it more challenging to secure a loan for that dream car. As you also mentioned, it's clear that the pandemic has significantly impacted the automotive industry, and the changes we've seen may be here to stay. As car companies work to recover from the inventory shortage, it will be interesting to see how prices and availability continue to evolve. For now, car buyers should be prepared to do their research and weigh the true cost of their purchase carefully. With the landscape of car ownership constantly changing, it's essential to stay informed to make the best decision for your budget and lifestyle. Despite the recent drop in prices, the current situation in the car market is still challenging for many consumers. As the pandemic caused a significant impact on the global economy, car prices and interest rates have been continuously fluctuating, making it difficult for buyers to find affordable options. The shortage of microchips resulted in a scarcity of new cars, forcing consumers to turn to the used car market, which then caused prices to surge. Even though the inventory levels are starting to recover, the high interest rates caused by the Federal Reserve's efforts to control inflation are still making it harder for buyers to secure loans and afford their dream cars. Furthermore, the pandemic's impact on the rental car industry has added another layer of complexity to the car market. With the travel industry taking a significant hit during the pandemic, rental car companies faced a shortage of vehicles, leading to higher rental prices and even fewer options for consumers looking to rent a car. As the pandemic situation starts to improve, the demand for rental cars is expected to increase, putting more pressure on the already constrained market. Experts like Joseph Yoon predict that the current dynamic of rising interest rates will continue to shape the car market in the upcoming year, making it challenging for consumers to find affordable options. While there has been a recent decline in prices, the average price of a used car is still significantly higher than the pre-pandemic levels. The market is slowly returning to normalcy, but it may take some time before buyers can purchase a car at a more familiar price point. In the meantime, it's essential for consumers to do their research, consider their options, and be patient when making a car purchase. The pandemic had far-reaching effects on the automotive industry, not just causing a shortage of new cars but also leading to a rise in prices for rental cars and used cars. This shortage was caused by the microchip shortage, which forced car manufacturers to shut down production lines, leading to lower supply levels. As a result, car buyers had to look for alternative options, leading to a surge in demand for rental cars and used cars. This increase in demand also led to higher prices for rental cars, which was exacerbated by the need for rental car companies to sell off some of their fleets to cope with the shortage. The recovery of inventory levels did not immediately lead to a reduction in rental car prices, as more people were traveling and in need of rental vehicles, leading to further price hikes. Meanwhile, in the used car market, dropping prices might seem like a good deal for buyers, but the reality of soaring interest rates means that financing a purchase in this inflated market could result in higher monthly payments and the risk of negative equity. It's important for car buyers to consider the true cost of their purchase, including the financing options available. Overall, the pandemic brought significant changes to the automotive industry, causing a shortage of new cars, rising prices for rental cars and used cars, and the need for car buyers to carefully consider their financing options. As the industry continues to recover, it will be interesting to see how these changes play out in the long term. As the pandemic caused a shortage of new cars, many car buyers have turned to the used car market, which offers more affordable prices. However, it's important to keep in mind the impact of rising interest rates, which could result in higher monthly payments and paying more over the life of the loan.